Hey guys, welcome back to another video. Thought I'd do a quick video about the markets today. It's been a whipsaw of a day. As we can see, the major indices are down over 1%. Earlier on we were testing levels at 2450, which was down clearly close to 2%. And now, so what is happening in the markets and what you could do to help yourself. So as we can see, all the major indices have now tested a bear market territory. Let me just go and show you that quickly. So to get a price range, there we go. So we are down, around, what's that, 20%, 24%. From its peak to trough, and clearly obviously the markets are not doing great. Even today it's quite havoc. So what could you do to protect yourself? Well, I made an earlier video about this, I think a couple of days ago. I'll leave a link in the description about what you should be buying, and in short the answer is silver. So let's look at how silver has been doing the last month, and since I sort of reviewed it. I think I reviewed it at a price of 1520 or something like that. We're now at like 1560. And as you can see, look, even though the major indices are down, so we can see the S&P 500, the Nasdaq is down 2%, Dow Jones is down 1.9, Apple is collapsing, yet silver is staying strong. And this is because, that's where the safe haven lies. Safe havens lie in precious commodities. So you want to be buying stuff like gold and silver. In my opinion, the reason why I have poured more into silver than gold is because gold is sort of known as being the safe haven or safe asset. So everyone pours their money into gold, and then that will make gold obviously rise, but also means that there'll be a lot of liquidity in gold, which means the gains that you can get in silver wouldn't be as same in gold, because when gold goes up, other commodity baskets will also go up, and silver being one of them. And as we can see, in the last month it has done so, and it's continuing to do so. It's testing new levels, and I think we're up above the 3-month for sure. I think we're also testing up levels from, we've even broken past the levels in July 2018. So it's definitely promising, and it's something that you should sort of get as a hedge. In your portfolio to protect yourself. And if we just have a quick look at gold as well, gold is also doing great. Again, if we compare, gold is up about 0.5% today, and silver was up around over 1%, I believe, 1.2. So that reinforces my point about why silver is a better buy. But again, you could also get into gold. That shouldn't be a problem. And now I'm going to talk about something a bit controversial. In my mind, it's something that's dead now, but people are still quite focused on it, and that's Bitcoin. Is Bitcoin going to save you in this market? And is it a safe haven? Is it the replacement of gold? Well, I personally don't think so. Whether you believe Bitcoin is here to stay or not, if we just look at how is it doing, it's not doing great. It's already down from its peak, close to, what's that, 70-80% now, which is huge. And I don't think it's a time to get into Bitcoin now, because even if you believe Bitcoin is the future, it's definitely not the future in the immediate term, right? It will be in the future, like the point being, it's gonna, if it does, like the tech bubble, if it is something like technology that's gonna be the new best thing. Obviously, in this case, Bitcoin isn't the technology, blockchain is. But if that's what you believe anyway, you should be thinking to get into maybe after we have the next crash, which we're in now, I believe. Once it plays out, and then allow Bitcoin to be as cheap as possible, and then buy into it. But it's not the safe haven right now, and it's not the gold right now. Even if it is the next big thing, like i.e. if you say it's like the next technology sort of sector, digital side of things, then it's a good buy once everything is done and dusted, and it's gone down to its all-time lows. Well, all-time lows meaning at least we're going down above 1,000. I'm talking about. So yeah, right now it's not the safe haven, so I wouldn't bother thinking about that. Right now, what's considered safe haven is gold and silver and the precious metals. So stick to that right now. Keep a hedge in your portfolio and be safe out there. It is a tough market to trade in. In fact, actually, it's a tough market for investors. For traders, in fact, it's actually a great market because the volatility. If we just look at the volatility is great. We're, I think, above 20, 20, 24. Let's have a quick look. Yeah, we're about 25 on the volatility index, which is great for traders. For investors, it's a little bit of an issue, but for traders, it's great because now it means is you can get those upside and downside gains quite quickly, so you can get in and out quite quickly. Obviously, provided you get on the right side of the trade. And obviously, the reason why today's been a big drag down as well is mainly because of this shock. Now, what's happening with Apple? Well, big problems. As you can see, we've gone from 230 towards now 145. And the problem mainly started when Tim Cook said on the conference call that he's not going to, or Apple is not going to, tell you about unit sales for iPhones anymore. And as we all know, iPhones is a big driver for Apple sales. I believe it's around 60% actually. I have to double check that though. So yeah, that's obviously going to cause problems because now people think, okay, if he's not going to tell us the unit sales of iPhones, that means there's definitely going down year on year. But the reason why they're able to maintain revenue or increase is because the price of the product's gone up. But then obviously long term, that's not great because you want more consumers in the product. So as you can keep releasing new phones, you'll still benefit from that. So yeah, I think this has obviously caused a major downfall in the major indices today, and especially in the Nasdaq, as we can see, is down 2%, and the Dow Jones, because Apple weighs heavily on the Dow Jones. So yeah, so stay out there, be safe. I think you should get into safe havens if you're not in already. It's still not a bad time to buy. And remember, it's a hedge in your portfolio. So a hedge basically means because it's a contrarian view, not many other people are thinking to buy into right now. You buy into it, it's a good chance to hold, and if it plays out, you can keep adding to it and make good money from it. And see you next time in another video. Bye.